Here are the three things you need to know this morning. We start with the Consumer Price Index. Indeed, inflation was hot in the month of February, rising at the fastest pace on the headline number that we've seen since 1981. If you back it out and look at core, you get the fastest pace since 1982. The difference was, as you can see there, it was bang in line with estimates, which is not what we have seen in recent months. Economists have had a really hard time getting their arms around the pace of inflation. Now they seem to have gotten it, but we'll see if that lasts, considering what we have seen even since the end of February in commodities prices. So you see there the headline number rising 7.9% here year over year, acceleration from the 7.5% gain that we saw in January. And Brian Sozzi, as you look through the components here, gasoline rose by 6.6% and made up a full third of the gain. In fact, a lot of the pressure here came from energy prices. And again, just to put a fine point on this, we have since seen an even bigger surge in underlying energy prices.
Yeah, Julia, you get the real sense that the March CPI report could breach that double-digit or 10% level. But nonetheless, within this report, a couple things stood out to me. First, food at home prices up 1.4%. Used car prices, for once, actually declined in a month, down 0.2%. Apparel prices up for the fifth straight month, up 0.7%. But I really have to lock in at food and home prices, Julia, because prices on consumers are continuing to go up. It's not just gas. Of course, it's food at home. It's food away from home. 2 straight months of increased prices on consumers at food at home. But those prices that a lot of these food manufacturers are trying to pass through are just not enough to offset the higher costs they are in fact seeing. That's why earlier in the week you saw really what could be the start of many downgrades on food companies out of the by Consumer Edge Research. General Mills, Kellogg, Conagra, stocks got hammered here on these downgrades in large part because these companies just can't pass enough of these costs on and cannot do it quick enough.
So there are a lot of implications here, obviously. There are implications for the margins of these food companies. There are implications for consumers and whether they're going to push back against some of these price increases. And there are, of course, implications for the Federal Reserve. We've been waiting for this important data point before the Fed's meeting next week. And in the wake of this number, we do see a little bit of a movement here in yields across the board here, a little bit of an upward move, even though, again, of course, the expectation is that the Fed will be raising rates by 25 basis points next week, but still something to keep an eye on in terms of the future trajectory. You know, there was a lot of talk before Russia invaded Ukraine that inflation had peaked. And clearly, that was in January. Clearly, that is not the case.